Here we go. Here we go. And we are officially live. Good morning, good morning, good morning. We are officially live. Welcome to another episode of Money Matters. Today is Thanksgiving Day. Can you believe it, y'all? Can you believe it, y'all? We are here in Thanksgiving Day. Super excited that you are here. We're going to be taking some really exciting news and information about what's happening in the world of real estate, if you can believe it. So, welcome and happy Thanksgiving, first and foremost. It is Thanksgiving Thursday, it is early in the morning. And hey, if you are up and watching this, or maybe you're listening while you're preparing your turkey dinner, hey, welcome and thank you so much for joining me. I hope to make this worthwhile for you. If you are watching some sort of replay, if you are here brand new to the channel, whether on Facebook, because we are actually broadcasting live on Facebook as well as YouTube channel, and the computer still is showing green lights, which means I haven't crashed it yet. So thank you for the makers of Lenovo for making me able to do this stuff, as well as all of the technical other stuff that connects all the wires and everything else. It's not even wires anymore, right? So I do want to welcome everybody. If you're brand new, do me a huge favor, subscribe to the channel. If you're enjoying the content, smash the like button right now. If there's some sort of notification button to hit, please do hit it. Today we're going to be talking about what's going on in the world of real estate. We have some news about the mortgages, whether they're going up or down and where they're holding, what's going on with the new construction, what are the people saying that the Biden administration might mean for the housing and all of the challenges that we're seeing. We're going to be seeing some good stuff, some bad stuff. I'm going to also covering some of the scam stuff that I have been seeing and hearing from my mentees and students, and it breaks my heart, but you know, scammers are here to stay. So I hope that you will continue to watch some of the free content, get to know individuals who are behind those screens, learn from them in a free manner, and then hey, if you do decide to join some of the programs they might have, then you know, go ahead and take a look into that stuff. I do also want to preface that we are sponsored by One Deal Away, which is a financial education company, and I do have very special gifts and announcements today to share with you on this special Thanksgiving Day of 2020. And hey, finally, if you are listening this on any of the podcasting services, welcome as well. No charge today. Well, that's a lie. There are very few charges today, but I promise you're not missing anything. I will explain it all. I do want to welcome you. Do subscribe. And hey, y'all, let's do this. All right. Good morning. Happy Thanksgiving yet again if you are joining slightly later, which I understand. Hey, I hope you do get the chance to hang out with the family, with the friends. Probably not as it was in the years past, but hey, with the vaccines and everything else, which, you know, I'm still split on the whole thing. Maybe, just maybe, you'll have an opportunity to see them. All right, y'all. No time to waste. Let's go in and take a look at what's going on. And first piece of news that I want to go through is what a Biden administration means for rental housing challenges. This is coming to us from Forbes, and so I apologize for a super weird look of the whole thing. But I can't figure out how to make Forbes look better when I have to do multiple things on the screen. So maybe I need to improve. I kept saying Forbes needs to improve, but I need to improve. So they have a very, very long intro, but I'm going to try to summarize on the most important pieces. And one of the things that they're talking about is, quote, Biden has a really ambitious agenda that will try to create opportunities for more low and middle income Americans to become home owners or afford rental housing. So how are they going to do that? I have no clue. I don't know that they have a power to control prices, although we've seen it in countries like Russia and China and stuff. So is that coming to U.S.? Hey, who the hey knows? Anything is possible in 2021 and potentially, well, I say 2020, but potentially 2021 as well. But he's also saying that he's looking to create incentives to alleviate some of the current state and local regulations that inhibit new constructions. There is talks that he is going to be expanding the more funding for Section 8. So maybe that's the part of kind of how you assist with the rental situation. And we've seen it when presidents have sort of expanded on the whole concept of wanting to improve folks buying stuff, that there were these incentives for the first time home buyers, right? Where, that's how FHA got created, right? The 3.5% down. So we'll see what that is they're going to put out, but that's kind of where the moves are. Now, one of the pieces that they're saying is that they're saying that the new administration should also work with applicable agencies like HUD and the CDC to further pursue actions that address the plight of renters and rental housing providers alike. Bills are due, and there isn't money to pay for all of them. We also need to see elimination of harmful, short-sighted eviction moratoria, and I agree. I absolutely agree with that statement right there, because right now, as we saw last week, y'all, last week in the last episode, as we saw in the last episode, a lot of the protection has been put on top of the tenants, but not a whole on the landlord side of things. And landlords are still expected to pay all of the expenses like mortgage and taxes, the cleanup bills like water, sewer, trash, insurance that they have to pay for, and as well any updates or anything like that. And the challenge is for, if you are a landlord, you then absolutely understand. But if you're just thinking about potentially becoming a landlord, because I don't know who you are, many people are watching this stuff, then, where's the money come from, right? Typically, when you buy a house, and it's an income producing, that income is supposed to take care of all of the expenses, right, on a monthly basis. And then hopefully, if the numbers work correctly, if you have done the math correctly, well, at that point, you can also then have a little bit of extra that, sort of can accumulate, whether to help you with your living expenses, or that you can put aside into a capital expansion, as I like to call it, fund, which means that you put some money in to the side and then go in and buy a next one. Now, there are many different strategies for how you can do that stuff. If you have been subscribing to the Bigger Pocket podcasts, say that fast 5 times, Nev. I can't. Then you will also realize and very quickly learn that there are this thing that they have sort of taglined called the Burr effect, right? Like the Burr strategy, BRRR, which is buy, rebuild, rent, and refinance, and then you kind of repeat the process. So that's really what it is in the whole sphere of things, right? And it's a cute little name, but that's kind of what a lot of folks are potentially doing. So it's one of the strategies that you can have. All right, now let's switch over and talk about what's going on with the mortgage rates. Well, they are ticking down ahead of Thanksgiving. Bond yields, which drive mortgage rates, rose modestly early in the week, but the news that several of the Federal Reserve emergency lending programs created as part of the CARES Act may not be extended into 2021 caused yields to slip back down. And let's take a look very quickly at what's going on. This is the bond yield, 10-year Treasury over year to date. And as you can see, we've gone from a high of 1.858 down to 0.878. So we lost entire percent point in since January. Of course, on a 1 day, we are actually slightly down, but on a 5-day, we're definitely up in the market. So that's something important for you to understand. Now, what they're saying is that topics that are kind of happening could have meaningful and cause meaningful developments in the future. Mortgage rates could easily see notable shifts in the upcoming weeks. And so that's something that we should all be paying attention to, right? So that's one of the pieces that I think it's very, very important. Now, where are the rates right now? Well, the rates are record low mortgage at 2.272, sorry, not 2.2, 2.72%, holding steady. 30-year fixed loan remained unchanged at 2.72 on average. 15-year mortgage also remained unchanged from last week at 2.28%. Last week alone, both the refinance index and the share of refinance applications were at the highest level since April as rates drew more conventional loan borrowers into the market. So what we saw is that first there was some of the riskier individuals that were investing and going in and applying. Now we're seeing much more conventional loan kind of coming in. Now we do have some acquisitions happening in the world of real estate, and some of you might be buying and trading on the stocks for the builders and that kind of stuff. So that's not necessarily something that I do, but I also understand people do it. So we're going to take a look at CoStar. The stock symbol is CSGP. They're announcing another acquisition for 250 million. So they announced the acquisition of HomeSnap Inc. for all cash at 250 million, and they are expecting to close on the deal by the end of the year, so in about a month. HomeSnap provides application technology services to real estate agents. So if you haven't heard it, maybe because you are not an agent, but if you are, you likely are familiar with it. Now, CoStar is one of the leading online platforms that provides wide-ranging data pertaining to commercial real estate and online marketplace. So again, if you are more in residential, you likely haven't heard of them, but if you are in commercial real estate, you potentially have heard of them. The number of property listings across the United States on CoStar platform will increase to 2.6 million, and HomeSnap is expected to generate $40 million in revenue for 2020, which indicates a year-over-year surge of 45%. This is a huge gain in any market, and I am just realizing you can't really see this. You can't really see this. I can see it beautifully on my screen, but you can't really see it on yours. So let's see if we can fix that. Okay, maybe you can see it now. I don't know. They also have been on acquisition spree, acquired 10X for 190 million, RentPath for 588 million, and the 10X, it's an online auction platform for commercial real estate, and they're combining that operation with LoopNet and CoStar. Now, LoopNet, you might have heard about it, is a place where you can actually look and find some really nice deals when it comes to commercial real estate space. So it's not the only place, but many people go over there to take a look at it. Now, some people, there's some mixed feelings about LoopNet. Some people say that's sort of the last hurrah of the commercial space. Maybe that's true, maybe it's not. I don't know. You let me know how you feel about the whole thing. Acquisitions also include STR Inc., Off Campus Partners LLC, ForRent.com, Apartment Finder, LoopNet, and Apartments.com. So as you can see, CoStar has been acquiring like crazy. They're focused on expanding its presence in international markets as well, acquiring a company over in Germany, and they're eyeing to launch data collection services in 50 international cities over the next 2 years. So one of the things that you will see a trend in today's show is that there are some serious movements in technology when it comes to real estate, which is both exciting and petrifying for me. Now, one of the things that I did want to share, and this is part of the announcement that is going to come later on, there's some special offers and gifts if you're so inclined. You don't have to participate, but you might like it, so I figure I share with you that as well. Now, one of the things that, as you might know, is that I have been heavily involved for about a year, plus minus, have started to build technology company called Syshen that is going to improve greatly on your ability to get into real estate, to be able to go and buy and potentially hold and sell and that kind of stuff. Right now it's just buy section, so we're just working on the buy section of the whole thing. of discounted properties. Yesterday, I want to say it was yesterday, I shared a video on YouTube, and I want to say I shared it on the Facebook group as well, of me working with a student and how we found $1.2 million property that was selling for $10,000. This is the kind of deals that you can expect to see with Syshen. And of course, what is going to be part of it? Well, right now we're just on the buy side, then it's going to be the hold side. We're going to start working on the selling side, on the lending side, borrowing side, exchange side, crowdfunding side, and the other piece that we're coming really close. So all of the testing, we're testing mode right now. It's not beta testing. It's not announced to the public. Well, it's announced to the public, I guess, right now. There goes that. But it's not available for public yet. We're also getting onto the blockchain. So right now, the programming, the smart contract to upload your home onto the blockchain and tokenize it is working really well. We've tested it multiple times. It's on the test net. It's working really well. And so there are pieces that we just want to still kind of test, because it is really important of kind of how do we do the whole concept. So we are very excited. I am personally very excited to announce that uploading onto the blockchain is now officially working. It's been tested by some of the experts within the blockchain space, and they gave a thumbs up and a green light for it. So that's really exciting piece. Now, with that also will come a tradable coin that you can earn as reward. But now I've said too much, so you gotta wait. You gotta wait till we get there. Let's go back to the news before Nev gets too excited. Okay. U.S. home prices surge to 6-year high in September. This is coming from Case-Shiller Index, and that's what they're showing. Cost of buying a house rose sharply again in September, hit a 6-year high at Case-Shiller Index showed. 20 large cities rose at 6.6% yearly. Economists had forecasted only a 5.4% increase, which means that we have beat the projections. This is always a good thing, but a little bit on a scary end. Don't expect this to last for a long time. The entire country has actually seen a 7% increase in home prices over the last year, making the fastest 12-month gain since 2014. This is one of the exciting sides of the real estate marketplace. However, on the not so exciting side is what's going on in some of the other sections. For example, 1/3 of malls is gone in 2020, with about 25% more to close in the next 3 to 5 years. This is not so good for the retail sector on the commercial side of real estate. Now, does that mean that buildings are going to be turned down? Potentially. Could it be that they're going to be parking lots instead of it? Yes. Could it be some sort of entertainment center? Yes. Could it be housing? Yes. Speaking of housing, an interesting find that I just actually have had. In a full disclosure, I have been looking at some of the properties here in Providence and have found a couple of deals that I thought was really exciting for me personally. There are commercial spaces, but they do hold potential multiple purpose, and the prices are so ridiculously low that it's almost impossible for me to say no to it, especially that I know that this city is going to boom, especially as Boston kind of continues to become unaffordable. Then people are going to decide, hey, I might decide to commute 30 minutes and come to the suburb of Providence where things are still affordable. So one of the things that I have actually found is that you may know that Providence is a home to a first ever indoor mall that already has been semi-converted. So at the bottom of the floor, you actually have the shops. So you have stores, you have coffee shops, you have restaurants and that kind of stuff. And then on the second and third floor is no longer shops, they're actually micro lofts. Well, that property is officially up for sale. We're talking total of about, I want to say 46 or 48 units. I don't know what the pricing is. They didn't disclose it, but there it is. If you're thinking I might want to buy a mall slash housing, this could be a potential good deal for you. As far as I know, on the residential side, they are 100% occupancy. I could be wrong. On the retail side, that's the part that could be a bit more questionable. So that's one piece to kind of keep in mind if you're thinking about, I want to buy a mall. So the other side that I'm actually looking has to do with the office space. And I know I'm not the hottest on the office space, but I'm potentially looking for myself as well as creating it into a co-working space. And I believe that because of what the price is and what could be potentially charged on the co-working side, still making it ridiculously affordable, it could be a good money making machine. And then with the prices so compressed at the moment, I do see a potential that in about 5, definitely 10 years, so by the time we hit 25 to 2030, that we could actually see that the value of this particular deal could be 10x. I could be wrong. I could be grossly wrong. We will only see. And again, this is just something that piqued my interest, and we'll see kind of how it turns out. On the other side of the things that I wanted to share with you, that I have been sharing with you for a while, is that it's still a relatively speaking, and I still actually believe that it's a good time to refinance. There's still deals to be had. As you can see, I am actively looking at deals right now that I think might make sense. Of course, you gotta do your math component, right? There are some things on the discounted property deals that I'm also considering and looking at. So I'll be completely transparent with you there. And refinancing is still a potential good idea, especially if you can go from that 4% that you might have locked in only a few years back. Now, with the increase in valuation plus the reduction in the in the mortgages and in the price of money, because that's what mortgage is, it might be a good idea for you to potentially get into the space, or at least save some money by refinancing. The good news is, to a degree, that the new home sales are up 41% year over year. So this is really good for the home builders. But this also could potentially mean that you might actually see some change. And still, I have to adjust this stuff because I'm just realizing you can't see it again on the screen. But this also could mean that we might see a little bit on the downside of it, because anytime we see something super exciting and super, super big, potentially you could see that we hit some sort of downward motion. Home sales in Tahoe are up 80%. Lake Tahoe, beautiful area. Amazing skiing. Can I just point that out? Amazing skiing. And of course, people are buying towns and homes in the vacation towns. And so we are seeing some definite strong moves in Lake Tahoe. Bend, Oregon is another one. Bridgeport, Connecticut, Jersey Shore. So that's what we're seeing. People are very, very excited to go in. Bend is another beautiful place. Bridgeport, I don't know that I'm crazy about it, but I do see that folks from New York City, it's close enough, so you kind of want to escape it. And then Jersey Shore, the only thing I know about Jersey Shore, I'll be honest with you, is there was that show on MTV maybe years and years ago, something like that. So I don't even remember of it, but I remember Jersey Shore from there. So one of the pieces that, I gotta make this bigger. I can't see the screen, y'all. Former subprime player claims he can now short the mortgage market for climate and COVID risks. This is incredibly important story. Now, not that long ago, I did talk to you about the Big Short 2.0, especially within a commercial real estate, and there I am purchasing or thinking about purchasing some commercial real estate, but I'm not going, super big and stuff. I actually do have some ideas and strategies that I think might work. We'll see if that's going to pan out or not. For me, financially, might make sense to do that. So what is going on? Well, he's deciding, this is the guy that was playing in The Big Short. Well, not in the movie, but there was a character that was playing on his behalf in the movie. And by the way, if you haven't seen the movie, you gotta watch it. If you haven't seen it recently, you gotta watch it recently, because with everything kind of happening, things really do make sense. And Pluto TV, which is a free app, free place where you can watch movies and TV shows and that kind of stuff. And that's where you can actually find it potentially. At least it was there before. I don't know if it still is today. And this could tell you potentially to cut the cable. We're speaking about cutting the cable. I haven't had a cable in, gosh, what has it been? 6 years now, and I don't miss it. I don't miss it. I don't own a TV. I don't have a cable, but I did see that price of cable. Comcast is planning to actually increase the prices. Increase the prices. And speaking of the increased prices, before we go into the climate change and shorting it, I have also had some challenges with large appliances. Things have been breaking down, y'all. Things have been breaking down, so I'm trying not to touch much of anything. And I decided, well, it's Black Friday, right? Great deals are coming in. And what I have found is that great deals are coming in for everything that I don't want or need, that are sort of these really nice kind of consumer type of things, but they don't do much of anything else. Things like things that I would need that actually could improve the value of my property, like windows, roofing, plumbing, electrical, lumber, large appliances. None of that stuff is on sale. None of that stuff is on sale. And of course, the cost of living. So I just received a notice that the utilities are going to go up, taxes are going to go up, cable subscription is going to go up. I think Netflix also said they're going up. Hulu said that they're going up. So all of the things that we use on daily basis, prices are going up. This is the piece that I have been calling for a little while, that I've been expecting that is going to happen, and it's definitely coming true. Now, I'm not always right. I do make errors all the time in my expectations of what I think is going to happen than what actually happens. But on this particular sector, I have been absolutely right. So this is one of those things that is very interesting. And many people, when I have been asking about, like, why are all of these, like, they don't have really great deals. They pumped the prices ridiculously high, and it's and then they put in like $10 off, and I'm like, geez, Louise, come on, $10 off? Are you serious? Give me a deal, man. I like a good deal. Give me a good deal that I feel like I want something when I buy that. Okay, so anyways, I digress. So that's kind of what I have been seeing. Not a whole lot of great deals out there. But hey, if you have found some on some of these important things, will you please let me know? Hey, put it in the chat. Put it in the comment section. I do read that. I do respond. I do reply. All right, y'all. Let's go in and take a look at what's going on. So there's a risk of floods, fires, wind increase, and the cost of owning a home will go up. Cost of insurance rates, taxes, and uninsured losses will also go up, and as costs go up, the value of the home goes down. During the mortgage bubble in the early 2000s, a few savvy skeptics recognized the bonds were doomed, so they bet against them. Now, one of those players is doing the same thing, but not on subprime. This is not where the problem is. He's basing it on the risk of the housing market from climate change, right? We've talked about that. I want to say I don't know that I've done it on Money Matters show. I don't know that I've done it on the show here, but I did talk about it in the Facebook group, Real Estate Investing Secrets. I actually wrote a whole article. This is a few months back, so you might have to scroll down some to find it. But in the article, I talked about the trouble of potentially buying places in a coastal Florida, because coastal Florida is actually quote unquote sinking. I don't know that they're sinking, but the water is definitely rising. So, when you, and it depends what your strategy is. If you plan to buy and flip it, in 6 months, then okay. If Florida sinks in 6 months, we have bigger problems than COVID. Let me just put it out there, okay? So you should be fine. But I'm talking like you are planning for a large buy and hold kind of thing. You're planning to be there for 20, 30, 40, 50 years, pass it on to the kids, grandkids, that kind of stuff. In that case scenario, you might want to sort of rethink of the things. The other place that is also very kind of scary when we talk about the fires, floods, that kind of stuff is going to be California. We've been seeing some really bad fires happening this year, the western board. So Oregon, Florida, have been really severely hit by that. Earthquakes are also another problem, right? We've been seeing landslides, and now as we have the fires, right, that have hit now in 2020, landslides should be basically the big news coming in the next year or so whenever we see large downfall of water, and it could come as early as this winter potentially. So that's something to definitely think about, and I think this guy's onto something. As the risk of floods, fires, wind increase, the cost of owning a home will go up. Cost from higher insurance rates, higher taxes, and uninsured losses. And of course, we do know as the cost goes up, value of the homes goes down, and then as the value starts going down, less individuals actually want to buy it, which then becomes a self-fulfilling prophecy of the prices starting to tumble. And of course, the mortgage on the homes is at a higher risk of default, which means foreclosures, which mean prices go down. Now, this is going to be much more broadly impactful than just a mortgage story. He's looking at a specific areas where home values are likely to fall from climate impact. He is going to short a specific type of mortgage bond, and these bonds are issued by Fannie Mae and Freddie Mac to essentially protect them against the first X number of losses. And that's what he's basically shorted. By his calculations, close to a third of U.S. homeowners are vulnerable to big losses. And all of that is going to come from the climate change. Now, he also is basically saying that the biggest risk to this approach is timing. How long can I pay for those shorts before the theme gets realized? And this is highlighted again in the Big Short movie. If you haven't seen it, right, or maybe you read a book, which is equally as good, maybe even better. Books typically are much better than movies. But, you know, they were buying on the stuff. They were so sure of the whole thing. They were losing money hand over fist for months and months and months and months. And then, boom, the tsunami came out of, well, not really out of nowhere. To them, they saw it coming, right? But, you know, you have to withstand the losses for a very, very, very long time in order to make gains. And the question is, how long can you sustain it? Because remember, as what I don't remember who said it, but somebody very famous said it. So if you remember, put it in the chat. Please help me out. Somebody very, very, very famous basically said that, hey, you can, you know, the market can stay irrational for way longer than you can stay solvent. So you got to be very, very careful. This could have a super high payoff, but it also could have a very, very high risk associated with it. And so what I would kind of think about it is on the real estate investor side of things, I am looking for areas that maybe are not as prone to as much flooding or fire or winds. Can we say tornado? Because we're starting to see tornadoes nowadays in areas where we've never seen them before. You know, Europe never had tornadoes in centuries. We've had a few now in only a couple of years, right? So same thing here in Rhode Island, for example. Like earthquakes are not all that prevalent, but we had an earthquake not that long ago, and every so often, because I am so high up, I actually feel it, and I'm like, oh, here we go again. So we're starting to have some earthquakes here on the eastern seaboard as well. COVID has created a lot of problems that insurance premiums are too low. So he's expecting that because insurance premiums are too low, that the insurance company are not going to be able to basically pay off for all of the insurance that you might have. So you might not be as protected as you think you are. Legally, they are supposed to be able to protect you, right? But on the financial side of things, if their premiums are not high enough to be able to pay off everybody, that's where the problems could potentially come in. So that's something for you as an investor, potential investor, and definitely a homeowner that you need to think about. And as they realize that the premiums are too low, guess what? The premiums are going to go up. As premiums go up, that makes the home incredibly much more unaffordable. About 3 million mortgages are now in government or private sector COVID bailout program, and there's no guarantee that those borrowers will ever get current on their loans again. So the homeowners are at a risk of foreclosure And he's saying, quote, you're talking about very high delinquency rate of mortgages that we all through that we all through were much higher. We all thought, not through, Nev. All right, sorry about that. Welcome to the live show. You are talking about the very high delinquency rates of mortgages that we all thought were much higher quality than, for instance, you saw before the crisis. Rising foreclosures cause surrounding home values to fall as well. So this is one of the sides that you got to be very, very careful about and think through before you go out there and do some stuff. Now, on the distressed side of housing, well, the demand is coming back. As I have promised that this is going to come, this is going to be incredibly important. If you've been paying attention to what I'm saying here in the channel, if you have been following some of the live chats that I have had with my students, and people that are not even students are invited to kind of sometimes join in, where we go and talk about some strategies and things. Well, I've been saying that the demand for distressed housing is coming back. And this is going to come from bank foreclosures. This is going to come from tax foreclosures. So this is something that is definitely coming in. And by the way, the platform that I was just telling you not that long ago that we are building, that I'm really proud to be sort of the founder of, focuses on the distressed housing, focuses on that stuff to make it faster and easier for you. And I'll talk about it in a moment, I promise. So here we go. This is what they're saying. A pickup in demand for distressed housing with a 24% increase in completed foreclosure auction volume in September alone. Industry sources show a growing backlog of mortgages that are in foreclosure or delinquent, but not in a mortgage forbearance program. They're estimated that foreclosure will grow to more than 1.1 million by the second quarter of 2021. So we're looking at that summer when we're going to actually start seeing this stuff, right? An above average share of year ago foreclosure volume in September included Colorado, Oklahoma, Kentucky, Arkansas, and Indiana. That's where we're going to see the first wave. The second one, I think, potentially, maybe, I don't know, a below average share of year ago foreclosure volume included New York, Oregon, and New Jersey, along with Washington and Massachusetts. Foreclosure sales rate increased to a 7-year high of 55.6% in September alone. Buyers are showing up in force at the live foreclosure auctions. So that's something that you need to be aware. This is special attention to my students. Auctions are going to become super hot, super competitive, especially if we're talking about the bank foreclosure auctions. The tax foreclosure auctions are typically not as, they don't see as high of a numbers. However, you can see that it might become a bit more competitive. Again, it's going to depend on the property type, location, and who decides to show up. There's no way to predict how busy the auction is going to be or not, because auction houses do hold that information very tightly to their chest, and it's nearly impossible to get it. Trust me, I have tried. I have absolutely tried, and it's very, very hard to get that information. We do have a few more pieces of news that we need to cover. So remember, it's good news and bad news. You got to take both, and then you got to think for yourself of what does this all mean for me. Okay. The best new home sales report ever. During the years 2008 to 2019, we had the weakest housing recovery ever. Housing starts would never start a year at 1.5 million until we reach the year 2020 to 2024. The recent new home sales report indicates we are getting there, and they are saying that right now we are at 41.5% above the October 2019 estimate. Along with the growing in new home sales, the monthly supply for new homes has declined dramatically. A supply of 3.3 months at the current sale rate. This is ridiculously low. We've been covering it on the channel as well. Anything below 4.3 months of supply indicates that builders will have the utmost confidence to build. Higher levels of inventory in the range of 4.4 to 6.4 months indicate slow and steady growth for housing starts. And then if the inventory breaks above 6.5 months, then the market has issues and builders will likely stall on construction. And that means that we're overbuilt and means that we will actually have to go down in prices. We will see definitely a softening of the whole thing. Now, one of the pieces that I also want to mention is that there are many other places where they're starting to realize, wait a minute, we have a problem with lending, with buying, with selling, with that kind of stuff. And there are some companies that are building one-touch digital mortgage. And I won't lie that we are not one of them. We are one of them, except we are building our stuff on the blockchain, whereas these folks are building the traditional methodology. And, they are also having all kinds of conversations of, hey, we need to accelerate closing costs in 2021. Now, talking about all of this stuff, I do want to talk about one of the pieces that is also very important, and that is the top 10 suburbs with more space for the money. Now, this is also coming from Forbes, so it's going to come out weird and stuff, but that is okay. So, they have actually given us 10 suburbs with more space for the money. You will see that some of the stuff may sound weird, maybe you'll catch on, but if you don't, I will point it out. So, top suburbs that offer most affordable space near the nation's 10 largest metros. Now, one of the things that right now in Dimension over here, people are not doing, well, they're not thinking about commuting because most of us are working from home, right? But as the vaccine, rolls out and nobody grows a third arm, and then people become much more comfortable and also get the vaccine, and we kind of get over this whole pandemic thing. Maybe, hopefully, we'll see. Hey, let's hope for it, right? If you're gonna wish for that. So people will start commuting again. Again, things are going to change drastically, but I think we're going to see some of the commuting. Hold on, water break. Now, with that, they're saying maybe you need to go and look for suburbs that are closer to a place, and hey, we have some ideas for you. So in number one spot is Sicklerville, New Jersey. It is close to Philly. Median home price is $282,000, which is below the national average. And they're basically saying this is the per square foot is suburb is like 118 square foot. And, urban in Philly is 148. Median income for the area is 89,300. For me, I look at this and say, this is relatively speaking affordable. The homes are about 280. Median income is about 90,000. I can see that stuff, but it will get ugly as we continue going on. Cedar Hills, Texas, Urban Metro is Dallas. Listing price $352,000. Of course, it is cheaper to buy in the suburbs than it is, in the metro area. So I'm not going to read that. Median income is $76,600. So as you can see, we already are hitting an area where the price of a home is going higher, whereas the median income is much lower, making it much less affordable, in my humble opinion. I could be wrong. Tell me how you feel about it. Palos Hills, Illinois, Urban Metro is Chicago. $379,000 is the median listing price, and $65,700 is the median income. In addition to that, one thing to note that we've covered last week, if you haven't watched it, you gotta watch it. Okay, we covered in Chicago. Chicago is located in Cook County in Illinois, they have seen ridiculous increases in property taxes. So something for you to think about and consider as well. Marietta, Georgia, 440 million median listing price. Urban Metro is Atlanta, and here is a little bit better. It's 96,500. Now, Marietta, Georgia is one of the more expensive areas in Atlanta. And there are some areas that might be slightly cheaper, so just something for you to think about. But Marietta is beautiful. Jersey Village, Texas, nearby Houston, 447,000 is listing price, and median income is 85,400. Again, the median listing prices keep on going up. Let's go to Hanover, Massachusetts, just outside of Boston, where the median listing price is 670,000, but the median income is 129,100. Now, wouldn't it be nice to have this income and then go and get the house in the 200 level? I think so. I think so. But it doesn't always work that way unless you can find a job that gives you ability to be truly remote, at which point, hey, keep the big money. But the companies are getting much smarter as well, as we've covered, that they're saying, hey, if you're not in the area, we're actually going to reduce your income. Ouch. Ah, there you go. Hey, always creating a lose situation for a regular old mortal. But don't worry, I have something really exciting at the end of the show, I promise. Pine Island Ridge Plantation, Florida, which is just outside of Miami. Median listing price 679,000. Median income $75,000. This is ridiculously unaffordable in my humble opinion. Clark, New Jersey, median listing price 798,000 with a median income of $111,400. Then you have Ashton Sandy Spring, Maryland, just outside of D.C., where the median listing price is $844,000 and the median income is $153,300. This is one of the better incomes as well. But look at this. The per square foot in D.C. is just shy of $300 per square foot. That's a very expensive foot, if you ask me. Fullerton, California, just outside of L.A., median listing price is $1.155 million with a median income of only $109,900. This is the square foot in Palo Alto, California, or sorry, Fullerton, not Palo Alto. Fullerton is 418, LA $517 per square foot. So there you go. This is the top 10. This is the top 10 that they have given us. Now, final piece that I do want to share with you is probably the most exciting piece of information ever. For that, I might need my handy dandy pen. Let's see. Is my handy dandy pen going to play along? No, it is not. It is not. That's okay. Oh no, go away. Go away. My handy dandy pen is not going to play at all. So I do have very exciting piece of update and news to share with you. So, as you know, it is Thanksgiving, and I think that this year has been ridiculously challenging. We've had the booms and the busts. Some of us have made ridiculous amounts of money this year. Some of us are ridiculously much poorer. I think when we talk about financial piece, when we talk about the other piece, I think most of us have realized that we have some vulnerabilities in our lives, right? Whether that is that we needed a bigger home, more toilet paper before March, some food that was canned food and that we had to have some sort of face covering around us to begin with, and maybe some sort of gloves. Cleaning supplies were another thing that we realized maybe we should have that in a supply in our house, and maybe a deep freezer is not such a bad idea. Many of us have also learned how to thrive through the digital economy, how to figure out to use things like Zoom and Google Meets and Teams and Skypes and all the other technologically advanced things. Many of us jumped onto the Netflix and watched everything we possibly could watch. Some of us made more money not working than those that were stuck with working. Some of us lost jobs. Some of us gained jobs. Some of us had to hire people. Some of us had to fire people. It was a challenging year. It was a good and a bad year. I personally like to look at the good stuff. I always like to focus on what is good that can come out of this whole thing. It was a very tough year for me personally, mentally, emotionally, health-wise, knock on wood, doing okay. Properties, investments are doing okay. I moved and migrated relatively quickly and pivoted relatively quickly. And, thankfully, all of the tenants, all of the people in my life are doing okay. And I can only wish that the same is true for you. Now, if you find yourself in a position where you're saying, I have learned some lessons, and I have learned the lessons that have been highlighted to me, that maybe I need to learn a little bit better how to manage my money. I need to figure out how to actually invest in real estate, in the discounted real estate, and how to research property through the online sources. Because guess what? Things are going online more and more and more, right? If that is the case for you, okay? As you know, this is sponsored by One Deal Away. I am founder of OneDealAway.com. And if you go to OneDealAway.com, which is the number one, dealaway.com, you can actually find many different products that we have and offer. And right now, because it is Thanksgiving, I am actually giving a 50% discount. That's 50, not 15, 50. 50% discount. So you get a half off in the Black Friday. It actually starts today, and we start Black Friday early, and it's going to run all the way through December 5th or 6th. I can't remember. So it runs for basically an entire week. You have time to think about it. You have time to take a look at it. You have time to reach out to me and ask me questions. You will realize that I am a regular old human being that has stuff. So just about everything. The only thing that you can't get 50% off is swag stuff, which, the reason I don't want to put that as 50% off is that while I think it's kind of cool and I personally like it, and those hoodies are ridiculously soft and I absolutely love them, it's not going to serve you. It's not going to serve you a long term. So I typically, I don't offer many deals, many sales, because I believe that my products are already priced ridiculously low for what I offer. Just one student not that long ago, Sonia, you might have heard or seen some of the training videos with her, and I hope that she's okay that I'm actually mentioning her name, but I figured she would be, since she gave me permission to post the training videos and stuff where we talk about stuff and I call her by her name. So, she told me that she has gone in and invested in real estate courses that were, 10, 20, $30,000. She told me that my courses, which are, in the hundreds of dollars, and now you actually get it at 50% off, which she didn't have that opportunity. Sorry. Um, she said that my what she would learn from my courses and ability to hang out with me and do, get the support, is about 100 times more worth than what she learned from the different courses that she invested tens of thousands of dollars in. So I haven't had, knock on wood, I haven't had to date a single person to ask for their money back. I have never asked for a person to have their money back when they got into the course, right? So that should say something about the courses and what I offer. I do support my students for a lifetime. And when you buy a course from me, you have it for rest of your life. You have it in perpetuity. It never goes away. It never expires. You can watch it as many times as you want. The only thing you can do is you can't like resell it. That's the only thing that you can do. But you can watch it as many times as you want. It's yours in perpetuity. There's no pressure whatsoever. And it also comes with the 30-day money back guarantee. So you get into the course, you take a look into it, you start learning, and you realize this is not for me. I am not enjoying this stuff. I am not learning this stuff. Simply hit me up within 30 days of purchase. You get to keep whatever you received thus far, and you will get your money back 100%. No questions asked. No questions asked whatsoever. Just say, not for me, man. I want my money back. No problem. You will get full refund. Now, what do you also get? Here's the piece that I think gets very, very exciting. So, not only can you get courses, and you can get just about every and any course that you want in it, is going to be 50% off. My personal one where I think you should start is Real Estate on the Cheap Challenge. If you've never ever been in real estate, you're looking for those discounted properties that I told you is coming to the market and is going to start flooding the market. There's going to be some mad money that is going to be made. I've made quite a bit of amazing returns in 2009, 10, 11, when people were actually losing. I was making money. I was able to take in a few $100s and turn it into a few thousand, then take few thousand turning into an extra few $1,000s, and doing some of that stuff and then playing with some of the strategies. It would actually rendered me financially independent in my 30s. I actually wrote a book about it. You can get it on Amazon. You can get it on my website. You can actually get it for 50% off through my website. I believe it should be there. If it doesn't happen, let me know. I will do good. I will do good and honor my promise here to you that I'm doing live streaming here on a Thanksgiving day, because my honor, my word means more to me than a dollar or a penny. Okay, so this is what's coming and what is possible. So that's where I would start. The upgrade from there would be the Flip It Online Masterclass. This is the part, the Real Estate on the Cheap Challenge basically teaches you where and how to find these deals. The Flip It Online Masterclass teaches you how to flip this stuff from home. So how to do everything from home. We teach you how to find the stuff. We teach you how to research stuff. We teach you how to position it, how to sell it, what programs and contracts, everything that you need to know, and you get everything 50% off. Now, another piece that I wanted to share with you is because, Tyson is sort of like a leg off of onedealaway.com, and I'm sort of overseeing both of them. I get an ability to do something very cool and unique with the purchase right now. So between today, you don't have to do it right now. I want you to think about it, okay? I want you to think about it. It's important for me that you think about whether this is a good investment for you or not, okay? I don't want you to feel rushed. I don't want you to feel pressured. I want you to go in, check it out. If you want to connect with some of my students, I am happy to connect you with them. I am so sure and comfortable that y'all can talk about stuff, and they're not paid by me. They're not promoted by me. They don't get any kickback whatsoever. They're regular old human beings that you can connect with. I'm happy to put you in touch with them, so they can tell you about me, so you can actually have an unbiased opinion, if you would, because I know there's a lot of scams out there. And, just yesterday, actually, I had a student, and my students become my dear friends as well. I mean, to me, they become family, okay? And has told me, they reach out to me all the time about the deals and what they find to help them evaluate, and I do that for free. I should probably charge, but I don't. And so, they come out to me and they ask me questions, and, is this a good deal? Is this not a bad deal? I give them my honest opinion. Again, I tell them, do what makes you feel comfortable to do, but I always give them an honest opinion. So, she asked about a couple of things. I'm like, I don't know. Here's the questions that I would want to know about this particular thing, but I am a bit wary that they're not mentioning that stuff. They have a nice sales pitch, but nothing to back it. So ask these questions. And then she was telling me that there was another thing that kind of came in. She sort of succumbed to the whole thing, only later to realize it's a scam. Thankfully, she doesn't lose a whole lot of money. But nonetheless, it is your money and you should protect it. So for me, I don't want to pressure you. I want you to think about it, okay? You have all the way through December 5th to think about it, so you have an entire week. You can sleep on it, check it out. If you want to talk to my students, by all means, do that. You go in, you get yourself a course, 50% off. You get 30 days, money back guarantee, right? On top of that, here's what is also going to happen. Because we're getting onto the blockchain, right? Because we're getting into releasing our own coins and tokens, and they're going to go first into the pre-sale, which folks can participate in. Then they're going to go into the sort of the crowd sale kind of stuff, and then they're going to be fully tradable on the markets in the, this is sort of in phases of what is coming. All of the individuals who enroll in programs between today, right, Thanksgiving Day, through December 5th will also receive an airdrop. Airdrop basically is a gift. You will receive a gift, a pile of cryptocurrency, okay, that you will be able, we're going to be doing all kinds of cool things that you can then exchange it for additional products, additional services. You can exchange it and be able to use it to power the network. You can trade it for other cryptos where you can potentially make some money. Again, I don't know. I don't want to make promises because, it's the market. I don't know how things are going to turn out. But if you ever thought about getting yourself into the crypto and wanting to find out, like, how do I get it for free? Well, this is one of the options that you can get. Now, what is this crypto going to be doing? Well, we're doing a few different things with, staking and that kind of stuff. I don't want to get into it right now. We'll talk about it later. But at the moment, I want you to understand that not only do you get a course for 50% off, you will also receive an airdrop of coins. That's right. You're going to receive crypto for free. Okay? And that's before any of the private sales or any of the stuff. And the students that already have, the paying students in good standing, which all of them are also going to receive an airdrop. They didn't know this. This is a surprise for them. I do like to surprise my students. I do like to give a bit extra and a bit additional piece. And then the third piece that you also don't know, maybe you do, maybe you don't, with purchase of any of the courses and enrolling into One Deal Away program, learning program, you also receive Crypto 101 course absolutely for free. So there you go. I think that's probably the best Black Friday, Black Week sale that you could have ever asked for. I do appreciate you so much. Thank you from the bottom of my heart for everything that you do. And I look forward to seeing you tomorrow. If you're enjoying what we do here in this particular show, hey, do subscribe, do hit a bell button. And if any of the courses or any of the stuff that I share here with you, you want to check it out, it's going to be on onedealaway.com. It's going to be number one. You got to put number one, dealaway.com. Okay? All right, y'all. Until next time, stay forever money blessed. And do remember, you are only one.